12 Business Loans Explained with Victoria Warren Jackson. So in this video, I will be discussing the following 12 business loans: bank loans, credit union loans, PayPal Loan Builder, PayPal Working Capital, Shopify Working Capital, SCORE, the U.S. Small Business Administration, that SBA EIDL loan, government grants, Payday Loans, Square Capital Loans, American Express business credit cards, Kiva, and family and friends. A key point: traditional business loans, they may require the following items: a completed application, personal tax returns, business financial statements, and other additional documents may be required. So if you apply for a bank loan, please understand that bank loans are term loans with a fixed interest rate. Banks, they want security. They want their loans to be paid back. So know what you're getting into in advance. Banks, they do not typically finance startup businesses based on a business plan. You will be required to submit additional documentation. Banks, they like to see at least 2 years of financial statements. They want to see a credit score of at least 650 or higher. When you're applying for bank loans, the business owner will sign a personal guarantee. This means if your business fails, you agree to dig into your pockets and repay the loan. Some banks will also ask for collateral. Know the difference between collateral interest or personal interest. Collateral can be a business vehicle, it can be property, or whatever you own. Banks are skeptical of startup businesses. Banks, they prefer to do business with businesses who are already generating revenue. The way it works: you provide some collateral. If you cannot repay the bank, you agree the bank can take your collateral. If the bank seizes your collateral, it may be sold at an auction. And if your collateral does not cover the cost of the loan, you agree by signing the application that the bank can collect the deficiency from you. You will be on the hook for the difference. With the bank loans, the bank will lend your business money. The bank loans, they're generally short-term loans, which is like 6 to 24 months, or a long-term loan, which can range from 3 years or more. So some of the most popular banks that I'm familiar with include Chase, Wells Fargo, and the Bank of America. Banks, they do allow you to open personal accounts and business accounts. But my best advice to you is keep your personal account and your business account separate. There are some pros and some cons to applying for a business loan. Some of the good things about applying for a business loan include you get those low interest rates, you have predictable monthly payments, and that bank loan may help to build your business credit. Also, you get to interact with a personal banker. You get that relationship. So if you have any questions, any concerns, if you need help, you can always call that professional banker. And also, one of the pros for having a bank loan is that lending, it's available for many different uses for your business. So you have the good pointers about your bank loan, but there are also some negative things and some cons, such as lengthy paperwork. There can be a long wait time to get approved for a bank loan. They do require a strong credit score, and usually they require some type of collateral. And if you'd like to get more information about what you're seeing here on the screen, you can go on over to www.nav.com. There's a difference between a secured loan and an unsecured loan. The secured loan, you have to provide collateral. Unsecured, no collateral. With the secured loan and an unsecured loan, they do look at your credit score. It's easier to get a secured loan because, once again, you're offering collateral. That unsecured loan is a little bit harder to get. With a secured loan, because you're offering collateral, you have a lower interest rate as opposed to that unsecured loan. A key point: more than likely, you will need to be a member of that bank or the credit union before you apply for a business loan. Banks, they do want a relationship with their members. Both of these institutions, they will look at your business income for repayment, And they may also look at your personal income. You may even get asked, do you have a job? Do you have a full-time job? Are you working full-time? I have some good news for you and some bad news. Many banks and credit unions, they do not offer startup businesses loans. However, the good news is there are many other agencies that offer business loans. Some more key points. In a bank or credit union, there are two different types of memberships, personal or business. And once again, I suggest that you keep them separate, especially for tax purposes. If you do not qualify for a bank loan, there are still other options out there that are available for you and your business. Credit unions. Credit unions, they offer membership to a select group or a certain audience, like for instance, teachers or firefighters or airline employees. If you are not a member of a certain audience and you know someone who is and they're a member of a credit union, you can ask that person to sponsor you. And it's really easy to sponsor someone. And if someone is going to sponsor you, you can just tell them, call the credit union and ask, what are the steps? What needs to be done? When you're dealing with the credit union, you will find that they have many different options to apply for a business loan. Their members, they have options to apply for business checking and business savings as well. Most business loans are term loans. And also, when you are applying for a business loan, if it is a term loan, that just simply means that you are borrowing money and you will repay the loan. With the credit union, they have different types of loans. For instance, they have equipment loan, which is for equipment only. And there are times when the credit union, they would have to approve your equipment in advance. Like for instance, your equipment may have to be approved based on the size of the equipment. For example, size has to be large enough and not movable. Why? Because they don't want to invest a lot of money in a smaller piece of equipment and someone can just come in and just push that equipment out the door. Also, credit unions may request an appraisal for your equipment as well. With the credit union, as I mentioned, they have different types of loan. You can get a vehicle loan that can be used for a new or a used vehicle. And then if you don't apply for any of those, you can also get a business credit card, which basically it's a loan. The credit union, they may request proof they may request a profit and a loss statement for your business. The credit union, they may also request your tax returns. If you have bad credit or no credit, some credit unions will require collateral and only offer business credit cards. If you are a startup business and you have bad credit, you may only qualify for a business credit card. And I don't think that's a bad option. With the credit union, you can also apply for a commercial real estate loan. And that means that you're trying to purchase a building for your business or you want to rent that business out. The credit union may not do 100% financing. You may have to provide some down payment and some additional fees. The credit union may only provide principal and the interest. And in that case, you will be responsible for the taxes, interest, and insurance separately. So at the credit union, as I just mentioned, you can apply for a commercial real estate property loan. That means that you're going to purchase commercial property. And if you're getting ready to purchase commercial property, just make sure you understand 5-1 ARM as it applies to commercial real estate. The note, it can be divided over 30 years. The term can be 15 years. Let me give you an example. The first 5 years is a fixed rate and the next 10 years is variable. The interest rate, it can go up or down with the 5-1 ARM. Examples, 10 years fixed interest rate, 10 years variable interest rate. Not all credit unions offer business account, business loans, and business credit cards. You still have options with the credit union. For example, my credit union, they stopped offering business account, business loans, and business credit cards. I don't understand why. So I called in, but I still couldn't get a good solid explanation why they made those changes. So if you're a member of a credit union, you can apply for a personal loan under your personal account or a personal line of credit. There is a difference between a personal loan and a personal line of credit. A key point, what's a personal loan? You will apply for the personal loan with the credit union by completing an application, and the underwriters, they get to determine how much you qualify for. Your credit score will be used to determine the interest rate that you qualify for. If you apply for a loan, it will be deposited directly into your personal account once you are approved. Once you pay the loan off, it is closed. There is a minimum monthly fee, and if you apply for a personal loan, you get to decide what you are going to do with the money, and this money can help grow your business. What is a personal line of credit? It is like a credit card, but you don't actually receive a credit card. A personal line of credit is a revolving account. You apply for the personal line of credit just like you're applying for a loan, and the underwriters will determine how much you qualify for. Your credit score will be used to determine how much you qualify for, and once you pay off your personal line of credit, it remains open so you can access these available funds at any time. Once you pay back the money, it becomes available again. There is a minimum monthly fee, and this money can be used for any business related purchases, and this loan or the line of credit can be secured or unsecured. Another key point, your credit score is so very important, and you need to monitor your credit report on a regular basis. You can request a free copy of your credit report every year from Equifax, Experian, and TransUnion, or you can go on over to the annualcreditreport.com to request a free copy. When you apply for a business loan, your personal credit will be pulled. Your business credit can be pulled as well, depending on the information that you include in your application package. Another key point, occasionally financial institutions, they do use business credit and not your personal credit to approve a business loan. If you apply for the PayPal business loan, the loan builder, if you already have a business checking account outside of PayPal, you can apply for the PayPal business loan, the loan builder. You must average monthly deposit of at least $8,000 or more in your business checking account for the past 4 months. You get charged a flat cost and a fixed fee, and there is no set interest rate for that PayPal business loan, loan builder. This particular loan is customized to your business. Everyone does not get the same cost or fixed fee. The payments, they're split up into weekly payments, and they're deducted from your business checking account. It's a short-term loan, and the payment is typically 52 weeks. For the PayPal business loans, there are 2 different types of PayPal business loans. 1, you have the PayPal business loan, that loan builder, or 2, you have PayPal working capital loan. So how do you apply for any of those PayPal business loans? As most business loans, you can apply online, or you can call in and get assistance over the phone. Why should you set up a PayPal business account? Well, if you do most of your sales online, like on Amazon or Shopify, you qualify to get a PayPal account. The PayPal business loan, the loan builder, what do they look for anyway? They'll check your FICO score, how long you've been in business, and also they may want to see some information pertaining to your revenue. With the PayPal working capital loan, apply if you do not already have a business checking account. You pay it back as you get paid, and that information was taken from the PayPal.com website. So based on your sales history with PayPal, and not on an outside business checking account, you can apply for the PayPal Working Capital Loan. A percentage will be deducted from the sales in your PayPal business account to repay this loan. You choose the amount of loan and the percentage of your PayPal sales that you would like to pay. To get more information on that, you can go to paypal.com as well. So with this PayPal Working Capital Loan, it is a fixed fee. You do get a fixed fee. You will be told your fixed fee once you are approved for the loan, and the fixed fee will not change. With this PayPal Capital Loan, no credit check, no FICO score required. Your PayPal business account history will be reviewed. The higher your sales, the faster you repay. So on days without sales, you won't pay a thing, but you do need to repay a minimum of 5% or 10% every 90 days to keep your loan in good standing. And there's more information about that on the paypal.com website. Here's a key point. If you have a low credit score, you get a higher interest rate. Shopify also has a loan, and it's known as the Shopify Working Capital Loan. To apply to check your eligibility, you can just simply go to the Shopify website. The Shopify Capital Loans are currently limited to the Shopify merchants who have a store. To get more information, I communicated with the representative through their chat option. I was told that I could request a callback. So getting to the Shopify support contact page, it was a little difficult for me. So I watched a quick video on their website. Once I reached the support page, I was expected to search the topic or the subject I needed to get help with. The help pages did not fix my issue. And then I was led to a contact page. On that Shopify website, you can click on Contact Shopify Support page, then click Contact Support, search a topic that you need support with, like for instance, billing issues. Scroll down and get help from the Shopify support team. You can choose which method you want to be contacted with, like chat, email, Twitter. You can request a callback. If the callback feature is currently unavailable, that means that they have a lot of calls in the queue. Their queue is already full. So if you need assistance, reach out to a representative through the chat, because that's what I did. It was easier for me to go through the chat option. And if you do go through the chat option, just remember that you will be speaking to a support member. With the Shopify Working Capital Loan, you need to know what capital is. What is capital? So the Merriam-Webster Dictionary defines capital as relating to or being assets that add to the long-term net worth of a corporation. What is Shopify Working Capital? What is that Shopify Working Capital business loan? So in order to be approved for a Shopify loan, it's mandatory that you are a Shopify merchant with an account with a Shopify store. So based on your sales history in your Shopify account, money will be withdrawn to repay the loan. Keep in mind that your monthly payments are not controlled. How does Shopify Capital work? You apply, your sales history is reviewed, Shopify offers a loan amount, you accept or you can decline. And the interest rate, it varies depending on your sales history. With the Shopify Working Capital Loan, getting approval for the Shopify loan is easier and quicker than applying for a bank loan. Excessive paperwork is not required, is out the window. So once you are approved for that Shopify Working Capital Loan, the money is deposited into your bank account in a few days. So there are some important questions that you need to make sure that you ask before you apply. Like for instance, what is the interest rate for the loan? How often will the money be withdrawn from your account? How much money will be withdrawn from your account daily? And what happens if you close your Shopify account before the loan is repaid? And how long will it take to repay your Shopify Working Capital Loan? With that Shopify Working Capital Loan, it is easier to obtain, but you could end up paying the loan longer based on your sales. The Shopify loan is granted, once again, I already mentioned that it's based on your sales, which is a plus for business owners who have solid sales but a low credit score and you have questionable tax returns. So if you do qualify and you do get the Shopify working capital loan, it's important to plan for these deductions. Do not forget, Shopify will withdraw a regular percentage from your merchant account to repay the loan. This means that you may have to increase your sales in order to repay this loan, to pay your employees, to order supplies, and to operate your business. I told you that I included SCORE in the list of items, but I just wanted to mention SCORE because I have attended many workshops over the years with SCORE, and I have received some invaluable business advice from the mentors. But based on what I know, SCORE does not provide business loans or business funding. However, SCORE can connect you with the right organizations for business loan advice. The U.S. Small Business Administration, also known as SBA, they do offer a SBA EIDL loan. So you can go on over to the SBA.gov website to start learning about the EIDL loan. You can apply for this SBA loan on their website. It is a long-term loan. It's not forgivable. You have to repay this loan. And there's some different names that you'll see for this SBA EIDL loan, such as SBA EIDL loan, economic injury, disaster loan, and disaster loan. With this SBA EIDL loan, it can help with your finances and operating expenses for your business. It can also help pay up to 6 months of working capital. The terms are fixed, can be 30 years, 3.75 APR for a business, and then 2.75 APR for a nonprofit organization. If you're interested in getting a loan for under $25,000 with no collateral attached and no personal guarantee, then you may want to apply for the SBA EIDL loan. SBA also offers guaranteed loans. So just note, the SBA does not directly lend money. The SBA loans are provided through SBA approved lenders. These SBA approved lenders can be banks and credit unions. The SBA will guarantee a percentage of the loan, which makes the lenders more willing to provide this loan. With these SBA guaranteed loans, there are 3 different types of SBA guaranteed loans, which includes the 7A loans, the 504 loans, and the micro loans. To be eligible for the 7A loan assistance, your business must operate for profit. You can't be a nonprofit business. You must be considered a small business. You must be engaged in or you propose to do business in the United States or its possessions, and you must have reasonable invested equity. And you can read more about the 7A loan on that SBA.gov website. Okay, so there's another guaranteed loan with the SBA. You can use any of those loans for alternative financial resources, including personal assets, before you seek financial assistance. If you qualify for a SBA guaranteed loan, you must be able to demonstrate a need for the loan, and you will use these loans for a sound business purpose. You cannot be delinquent on any other existing debt obligation to the U.S. government. With these SBA guaranteed loans, I also told you that they have the 504 loan. The 504 loan, in order to qualify for the 504 business loan, you must operate as a for-profit company in the United States or its possessions. You must have a tangible net worth of less than $15 million. You must have an average net income of less than $5 million after your federal income taxes for the 2 years preceding your application. And there's more information on the SBA.gov website for the 504 loan. And when you're applying for any of these SBA guaranteed loans, other general eligibility standards include that you have to fall within the SBA size guideline. You have to have qualified management expertise, a feasible business loan, good character, and the ability to repay the loan. These loans cannot be made to businesses that are engaged in non-profit, passive, or speculative activities. And another SBA guaranteed loan that I mentioned earlier are the micro loans. Each intermediary lender has its own lending and credit requirements. The intermediaries, they require some type of collateral as well as a personal guarantee of the business loan. And more information is found on the SBA.gov website as it pertains to micro loans. Government grants. The website, the go-to website for most businesses for government grants is grants.gov. Please understand that a grant is also an award. And you need to also know that grants are loans, but you do not repay the loan. It's free money. I found that it was easier to download the grants.gov mobile app. And by using the grants.gov mobile app, you will be able to search for federal grants, share funding opportunities. You can edit your application that's already in process. You can save your application. You can submit your application. And also you can get email notifications. So on that grants.gov website, I noticed that you can navigate by clicking on the tabs that are located at the top of the screen. You should see a drop-down menu. Once you click on those tabs, those drop-down menus will appear. And some of those tabs that I found were the Learn Grants, Search Grants, Applicants, Grantors, System to System, Forms, Connect, and Support. On the grants.gov website, I found that it was very easy to navigate. Do not be afraid to search the website and apply for any federal grant that you think you qualify for. There's a lot of information on that homepage. So if you've never applied for a grant before, I'm just letting you know everything that you need to know is on that website. Navigate the website. Follow as many tabs as necessary to get the information that you need. And then if you get lost along the way, there is a help link that's located at the top of the screen. On the grants.gov website, I clicked on the support tab. I located the support center. And by clicking on the applicant training, I was able to watch some videos. There were several videos that I did watch on grants.gov. And the next thing that I learned was how to register, start registering. And on the grants.gov homepage, I was able to locate the link that reads register. When I registered, I found that particular link was also located in the top right-hand corner of the website. So what you're looking at now, just some information that I took from the grants.gov website. And basically, they just give you an explanation of registering on the grants.gov website. You have an option to select if you are an applicant or if you are a grantor. And then they give you several different bits of information that you will need to know if you are an applicant or a grantor. And you can go on over to grants.gov to find out more about that. But if you're an applicant or a grantor, you do need to complete the required form fields. You do need to confirm your email address. If you're an applicant, you can add an organization, applicant profile, or an individual applicant profile after registering. If you are a grantor, you can add your agency point of contact. You can add your agency point of contact to associate your email address with the agency. And once again, I told you, you can go on over to grants.gov to get more information about what you're seeing here. On that grants.gov website, you can search for grants, and they have thousands of grants on there, as a matter of fact. So at the top of the screen, you're going to see the search field. Leave that first field as grant opportunities, and then enter some keywords that you may be looking into, and then you're going to go ahead and click on go. And you can also search for grants by clicking on the search grants tab that's located on the home page. So payday loans are another type of loan, which I am familiar with myself. Some people would say payday lender, aka payday loan. These are short-term loans, typically repayable within 2 weeks bi-weekly. You get the cash in advance. So it's a cash advance on your paycheck, basically. So if you need some money fast and you want an easy approval process and no collateral, that payday loan is maybe a good option. With the payday loan, bad credit is not considered. Payday loans, they help with emergency situations. You must be employed, which is why it's called payday. You must have a checking account, and you will receive the money the same day or within 24 hours if you get approved. With the payday loans, there's some required information, like for instance, they may ask for a pay stub, your pay date, proof of a bank statement. Do you have a checking account? And when I went in to apply for the payday loan, I had to leave a check with them, and the lender, they'll tell you what you need to write on your check. So you will leave the check with the lender, and when it's time to repay the loan, you have the option to pay the money back in person on your payday. And if you don't go back in on your payday in person to repay the loan, they can deposit the check that you left with them. With the payday loan, you borrow the money before you get paid, and then once you get paid, you repay the money in person. And then if you don't want to pay the money in person, as I already mentioned, they'll use the check that you left with them, and they'll withdraw the money from a checking account. The loan is paid back. As I already told you, it's a bi-weekly short-term loan. And also, you can always set up a repayment plan with your lender. For many of the payday loans, you can apply online or you can apply in person. The lenders, they may have different repayment options. You would just have to speak to them to find out if they have biweekly options, installments, or you can just ask them for whatever you need and they can say yes or they can say no. If you apply for a payday loan, make sure that you ask, what happens if the loan cannot be repaid on time? Know the consequences. Will they increase your interest? Will they extend the loan? Or will they file a lawsuit? With those payday loans, I have experience with Amscot. So for about a year or so, I was going over budget because I was purchasing supplies for my business. And for me, I just didn't want anybody to know that I was going in the red every month. So I went over to Amscot. I was approved for a $500 loan. I provided proof of my last pay stub. And then I was required to show my driver's license. I provided my cell phone number, my telephone number. I provided proof of my bank account. And then I had to give them a check for $552. And that included the finance charge. With that particular payday loan, after I signed the terms of agreement, I walked away with $500, and that really did help to keep my business going. I was also paying a personal loan at the time from the credit union, and I have to admit, I did what I thought was best to save my business. Some people would disagree with going to Amscot, but I had no other choice. I was embarrassed about my financial situation, and at least I didn't lose my business. Amscot, it was a temporary solution for me. And at the time, I didn't know anyone who was in a position anyway who was willing to invest in my business or who could lend me money. I did what I had to do to save my business. Square, they also offer a loan. It's called the Square Capital Loan. So Square allows its businesses to process credit cards and debit card payments by using a card reader. With that Square Capital Loan, it's very similar to the Shopify Working Capital Loan. You must be a Square seller. You must have a Square account. there is, well, this is not a traditional type of loan. They do offer smaller loans, like, for example, $500. Eligibility is just based on your account history, and they also have access to your transaction data. With the Square Capital loan, eligibility reviews are system generated before a loan offer is made. If a business is eligible to receive a Square Capital loan, the owner is notified by email or through their Square dashboard. So after they receive that email or that Square dashboard notification, then that business owner, they select the amount of the loan, and then the loan fee and the percentage to be deducted will then be displayed, and a percentage will be deducted from the business sales to repay the loan. With that Square Capital loan, the funds are deposited within 24 hours. You get automatic repayment, and the repayment depends on your daily card swipes and your sales. There are no late fees charged. It's a short-term loan, typically between 10 to 18 months. If a business is profitable and repays a large percentage of that first loan, okay, they will get a second loan offer. A good option. The Square Capital loan is a good option if you do not qualify for a bank loan, for instance. And with this Square Capital loan, you don't have to worry about when the bill is due. I'm also familiar with American Express business credit cards. I have not spoken about business credit cards as of yet, so I just wanted to briefly mention the American Express business credit cards. American Express, their business credit cards, they function like a loan. You can receive a credit line, which is your credit limit. So I had a personal American Express card before being approved for the business card. And you may want to ask for a no credit limit, which gives you more flexible spending, more purchasing power. You can use your American Express business credit cards for materials, for inventory, and any other business needs. There are 14 different American Express business cards. So when you call in to speak with a representative, they'll start asking you questions because they want to connect you with the correct business card. How do you apply for that American Express business card? You can call in or you can apply online. If you call in, you talk to a representative, and as I mentioned, they're going to ask you some questions. So some of the questions may include, how much are your monthly expenses? How would you benefit from the membership rewards? And what is your profit for the past 2 years? With that American Express business card, your spending habits will be monitored. And if you have a good payment history, they will automatically increase your credit limit. American Express, they do offer business loans. However, business owners must have an American Express business card to be eligible for the loan offer. And the loan offers, they are computer generated. Your overall credit history with American Express is not required to qualify for the American Express business card. However, your overall credit history with American Express is a requirement for the business loan. I was happy when I came across Kiva, and it's pronounced as Kiva, because what I learned about Kiva is that you can raise money on this platform. You can get donations from your family, your friends, strangers, anyone who believes in your business. So Kiva is like a social lending platform. It's a crowdfunding platform. There are no credit checks and no collateral requirements. With Kiva, you can raise money on the website, and you can also lend money. It's a micro loan. This is microfinancing. You can lend money for $25 or you can borrow money as low as $25. However, you have to create a campaign on Kiva. You can share your goal amount with the community. You just tell them how much money you want to raise. Once your goal is reached, the money is deposited into your account. Repayment is made to the individuals who donated. There's an easy application process also with Kiva. What is social lending? What's the meaning for social lending? So social lending, it just simply means you lend other people money for their business. It's peer-to-peer lending, also known as P2P. It's social financing. People lending money to each other. Social banking and grouping. Those are all different terms that are used to represent social listing. The social lending. Okay, so with Kiva, how do you get approved for a Kiva loan? Okay, you can be recommended by a Kiva trustee, someone who has a history with Kiva, or also you can host a private funding period or a private campaign for about 15 days. And in that time, you want to contact your own network, your family, your friends, co-workers, and you want them to help fund your loan during that private funding period. And if you reach your goal, your campaign will then become available to the Kiva marketplace. So then other people can now support your campaign. How do you repay the Kiva loan? You get a 6-month grace period before starting repayment of the loan, which is a plus. You get monthly installments, and you can repay the loan over 1 to a 3-year period. The money, it goes back to the people who invested in your campaign. And last but not least, I want to discuss getting loans from your family and your friends. Borrowing from family and friends can be advantageous for most business owners because your family and friends may not require you to complete a personal guarantee application. They may not require interest, collateral, or a set repayment date. Discuss the different options. Is it a loan? Is it an investment in your business? Is it equity profit? Make sure that that information is clear. You can agree to repay the money, or you can offer equity in your business. When you're getting a loan with family and friends, businesses fail every day. We know that. So have a plan in advance. So just in case your business does not survive, how will you fulfill the debt to your family? Put everything in writing. Documentation beats conversation every time. You are stuck with your family forever. You do not want to cause a strain in your family. Friendships, they end every day. Treat the transaction like a business, not a friendship, and be clear about the repayment terms. A key point, I want you to know that you can do this. It may not be easy to get financing for your business, but if you do not give up, a door will eventually open. Connect with the right people. Put in the work. And one day you will reap the benefits of your labor if you just hang in there. Here are some suggestions. Be responsible about applying for a loan. Pay attention to the repayment terms. Understand payoff terms in advance. Be familiar with any associated fees. Be cautious of interest rates, which are nothing but a penalty. Ask how much will you be expected to pay a month. Know the difference between secured and unsecured loans. If you do not qualify for a business loan, do your research. Find business grants. Pay your loan off as quickly as possible. Check with local banks in your area. Check the Chamber of Commerce in your area. You do need to remember you want a low interest loan. Inquire about flexible payments over a set time and a fixed interest rate. When you apply for a business account at a bank or a credit union, try to keep it separate from your personal account. You have the option to apply online for most business loans. Check to see if the interest rate changes every year. If you get a business loan, do not waste the money. Delegate where every dollar will go. Stick to your plan. Any lender, they have to make a profit. Know in advance the total dollar amount that's required to repay or to satisfy your business loan. It is always wiser to go with the lender with the lowest interest rate. Only get a business loan if you need cash flow to run your business. My advice is not to get a business loan to buy an expensive car or take a vacation. At the end of the day, it's still a loan and the money has to be repaid with interest. So if you're trying to raise capital for your business, try to get some people involved who believe in you. Consider turning your business into a joint venture if someone is willing to give you money. So at that point, it would not just be your business alone. It is important to keep good records and documentation just in case if you apply for a loan in the future. Scan your documents. Keep important documents in a file, or you can save the scanned copies on your computer. Most loans are not forgivable, so you need to ask the lender if they have loan forgiveness options. Business credit cards and personal credit cards can also be used to help finance your business. If your business has insufficient capital, do not be afraid to get a loan. A loan can help keep your business afloat. So here are some takeaways. There are two ways to get funding. One, equity or debt. Equity just simply means you share ownership. Somebody gives you money, you keep the money, they get a slice of the pie. Debt, you give collateral or you give security depending on the type of loan that you apply for. So startup capital for a new business, when you're applying or you're trying to get startup capital for a new business, there are not many things you can do outside of a loan or sharing capital. You can apply for grants if you do not want to apply for a business loan. Find people who are interested in your idea. Investors, they do ask difficult questions, so it's not easy to get financing or funding from investors. And here's some resources. You can do a Google search, look for lending or startup loans. Also, you can go to the PayPal website for the PayPal loan builder. You can also check the PayPal website for the PayPal working capital loan. You can also go over to the Shopify website to get information on the Shopify working capital loan. Additionally, you can go to score.org to get information on SCORE. You can go to SBA to get information on the SBA loans. Government loans, a great website is grants.gov. Square Capital, you can go over to squareup.com. And for the Kiva loan, you can just simply go over to kiva.org. You can also check LegalZoom for legal clinics. Make yourself familiar with the NAV calculator that's located at www.nav.com. And you can also check the Department of Economic Opportunity in your state. Here is a list of other lenders that provide small business loans. They are all very legitimate, such as Divvy, On Deck, Fundera, Funding Circle, Unbox, Veeam, Lendio, and Rocket Lawyer. I wish you so much success. I wish you all the best with your business. And I'm just telling you what I know.